Hello, everyone. Hello. Hope you guys had a joyous and a wonderful weekend. It's like it's been a very long time since I got back with you guys with another quick look at the markets. But it's just been a long weekend, and I've been busy, so I decided to wait until the last minute, early Monday morning, so we can take a look at what the markets are showing us. And I'm gonna show you guys something. We'll start by looking at a weekly chart of the VIX. Point out a couple of things. Again, I told you guys before that a bull market does not normally hardly ever starts with a VIX this low. So I want to highlight where we are with the VIX now on a weekly chart, longer term chart. Take out the short term, no worries, and show you guys what the VIX is showing us on this weekly chart. I want to go from left to right. Normally, when you try to look at trends, um, and you got enough history to be able to look at levels of support resistance. You want to try to see what markets showed us in the past as far as support resistance goes. And I want to highlight a couple, one particular area is where we are at the VIX now on this weekly chart. Back in around December, November, December, January of from 2021 to 2022, you see where the VIX started to base right below that $19 level, right below this $19 level, which is this line here, and started to find support. Went all the way back down towards 15, and then we started to see a move up in the VIX. We've seen something similar to that just before December 2021. Around November, we went a little bit lower. VIX went a little bit lower. See, I dipped a little bit lower, and then it started to rally. So it looks like when we would start to see the VIX on a weekly chart start to find some type of support like such, like we are seeing now. Normally that's a precursor to some form of rally. And the VIX has been settling on a weekly chart around between this 15 to 19 level for quite a bit now. And just here recently, looks like we're starting to get a turn up in the oscillators on this VIX weekly chart. Starting to see a turn up in the RSI. So RSI came down, like it made some type of horseshoe pattern, like it's starting to turn up now on this weekly chart. Okay. So that's the sign that no matter what transpires now, that we probably may have this debt ceiling thing taken care of. Don't think that's going to be enough to rally these markets into a new bull market. We are still at a very, very low VIX, and I think that it's going to be resolved eventually. And we may be coming to a head here because the VIX has been fighting to try to close above this $19 level here. But it is the bulls, I mean, the market bulls have been fighting back, pushing that VIX back down. Every time the VIX get a little spike above it, push it right back down and unable to close on a weekly chart, above this $19 level. Got another spike here last week, unable to close, but it's getting closer and closer to a close. Look at that. Getting closer and closer to a close above that $19 level. So is this the week where we could see that close by the end of the week? That's a possibility. We got to wait and see how things happen. But the momentum is starting to shift in favor of this VIX on the longer term chart. Now, we'll look at a quick VIX daily before we move on to a quick VIX daily before we move on to the next chart I want to show. So see how that VIX got that move above 19 and quickly got rejected on the daily chart. You see that rejection above it and right back down. So where to this week? We could see the VIX a little bit lower. And we're to see by the end of the week, do we creep back up above this 1911 hold? That could be like a last minute thing on Friday. We have to wait and see. It's hard to predict exactly from day to day what price action would do because it's just been so volatile. But I do believe that eventually the VIX will find a way to close above this 19 level on a weekly chart. But right now, since we got this debt ceiling thing pulled out, we could see the VIX come down just a little bit more, and that means the opposite for our market. But then I think VIX will go right back up. So remember, this volatility is with us to stay, and we're going to continue to see this. And once we finally see our VIX close above this level, because we've been unable to do it for the past two times we popped above that 19-hour level. We've been unable to close above it. Once we see a weekly close above this level, then we're probably going to start to see a meaningful continuation of the VIX higher. All right. Now let's take a look at, since we're looking at this VIX, now let's take a look at the SPXA 200R, which is a tool you guys know I like to use to track the overall market sentiment. This shows you the amount of stocks trading above the 200 moving average. And now, folks, this has been overall, it's been in a negative downturn. So again, for those who've been watching me talk about this tool, I did post a video not too long ago, strictly on how this tool oscillates and what you need to look out for, which is can be very, very, very crucial to what we can expect in our overall market. So this is again a sentiment gauge. I use it as a sentiment gauge, as overall sentiment as to which way markets are heading. The highest you can get in this tool is 100%. So that means you can get 100% of stocks trading above the 200-day moving average. Has that ever happened? Got very, very close back in 2021, I believe. 2008, we got up. 2008-9, we got up to about 95% before we started to see a reversal, so around there. But this is an overall downtrend, and we have seen some rallies along the way. But it's been in an overall downtrend. So we made it back up to 76 at one point, but could not go as high as 97 as we did about a year or so ago. Come right back down and found some support right around this 33%. So that means we hit this level back in March. It was 33% of stocks trading above the 200 moving average. And it was 76, almost 70, was that 70, 67% that was not. Then we got reversal. Could not make it back up to this other high. See that? So creating lower highs, folks. Only made it back up to about 60%. And now we're coming back down again, and look what's happening. Another sign of a possible reversal right here. So how do we go up this time? We got a huge wall, huge ceiling that was created right here. So do we see another rally that cannot take out the previous high? That's a possibility. So we could see a continuation. Now that we got a little debt ceiling thing taken care of, back up to this 50% level. That's a possibility. So we have to see how this pans out as we go through the trading day, throughout the rest of this day. Or we could get a rejection right here at this 20-period moving average. So that's what I'll be watching as we go through the rest of this day and tomorrow. We could get a nice little rally in this sentiment tool, which means we will see a rally in overall markets. But there's overhead resistance, heavy overhead resistance right at the 50% level. And overhead resistance right here at the 20-period moving average. So we have to see where we go from here. But eventually, I think somewhere between here and here, we'll see a rejection. That's what I'm thinking. And the next rejection, I think, could take out the previous low of that 33%. So that's what the sentiment tool is showing us. And if we look at a weekly chart of this tool, it also shows us, and I'm gonna get rid of these lines first before I do that. Get rid of these drawings that I just drew. And let's switch to a weekly chart. And I'm gonna look at a monthly chart too. So weekly chart shows you, again, load this up. Weekly chart shows you a possible, over the past 6-7 months or so, we've been creating this head and shoulders pattern on this weekly chart. See that? And we broke back below this level, starting back in April. Now we're in a new, it seems like we're in a new downtrend, looking to take out this low down here. Got very close to it here, and look what happened. Also push right back up to that 50% level. Look at that, which is right at that 20-period moving average line. Clear some drawings. So right back at the 20-period moving average line, gotta push back up. So this is a strong, this 50% level is a strong level of resistance right now for this particular tool. So if we do see a move back up to this level, we're probably going to see a strong rejection and that strong rejection could push us back down here for another test at around that 33% level, and we could actually take it out. So overall, the momentum is shifting downward in this tool. You also see it in RSI. So any rallies could be met with resistance real quick. Now let's take a look at the actual S&P. Oh, before we do that, let's take a look at a monthly chart of this tool as well. Show you guys that we're still in the bear market, folks. Here's a monthly look at this tool, and look how it's just the RSI just quickly shifted towards the downside after we petered out here, and it's quickly just shifting towards the downside. After we petered out around that 80% level on the monthly chart, we just starting to come right back down. It looks like eventually sometime some of this level will be taken out, and we could be looking to come back down to test this level. So overall, the momentum is negative. No matter what you see in the markets, we got some stocks that are taken out up new highs. This AI craze, such as NVIDIA. I think that's all it's going to be. Eventually, it's going to come to a head eventually. So just keep that in mind that we're still in the bear market. All right, now let's go to the S&P 500. We start off by looking at a weekly chart since we did that here. SPX. Okay. Now, one thing that the S&P 500 did do, so I had to put another level of resistance in here, that it did break above that $4,200 level. So what could we see? Let me show you. Let's look left again and see where the next level of resistance is. And it looks like that is right around this $4,300 level. So somewhere between where we are now, 4,200 to 4,300, we could see another move up, believe it or not, in this market, which is probably going to trap more bulls thinking that we're in a new bull market. Folks, don't get caught up in the hype. It's AI craze. We're not in a new bull market. We just see some stocks that are making some good runs. Don't get caught holding the bag. Just want to point that out. There's nothing wrong with taking a bullish bet, but just be careful and be ready for some major resistance. So we're going to start to see some major resistance between this $4,200 to $4,300 level, somewhere within there, because we got a strong rejection when we made it up to that $4,200 level back in August, around August of 2022. We got that strong rejection, and I mean it was a strong rejection too. So that's what the weekly chart shows, that strong rejection right there. Let me show this. Yeah, weekly chart. I had to make sure I get some stuff out the way. So that's where you're at now. Bulls are pushing on this $4,200 level, trying its best to get a break above it on this weekly chart in a major way. So right around, futures are showing us pretty pretty good move up right now. So we could break above this level. Next day or two, then I think we're going to run into some resistance somewhere up here. I'm not the one that always to pinpoint exactly where, because that can happen at any point. Just say this is a resistance zone somewhere around here. We could get a pushback up like we did here, and then immediate rejection like we did here. So we had to see what happens. But right now the bulls got a little bit of juice and looking to push this market up just a little bit further. But we had to see if that actually happens. So again, anything between here is probably going to be met with some fierce resistance. We're still in the bear market. And I think the next pullback, we could break back below this 20 per moving average on this weekly chart. That's what the near term, the bigger picture looks like. Look at the here and now. I'm taking a look at a daily chart. So here's the daily chart again. Got a strong move up on Friday, and we're pressing up against that $4,200 level, which we did break at one point. We closed above it this past week, so I do think we're going to see a little move higher. That's a possibility, but once we start to move higher, we can start to see some struggles. So I think it's going to be another way to trap some bulls in between this level up here. If we do break above this $4,200 major way, somewhere between this level, somewhere between here, we'll probably see a move up, possibly if we find a way to break above this level in a major way. Could see like a crazy move higher, and then it peter out. So keep in mind, be very, very careful. We break above this level. Don't stay too long because you could get caught holding the bag. Okay. Let's look at the S&P. Look at the S&P daily and weekly. We'll put it out there. So again, see this move on this weekly chart. Oh, finally got bounces from this zone here, and we're just moving higher. But we're going to run into some resistance up here somewhere, and then I think we're going to be heading right back down to test this lower zone. And next time I think on this weekly chart we test this lower zone, we could break it. So that's what we could be in store for as we go through the end of May and the start of June. Believe it or not, June is just a couple days away. So be mindful of that. Now, take a look at the Dow Jones, DJI. Here's a weekly chart of the Dow, and it just looks extremely weak, folks. Look at the Dow Jones, how it managed to make a fierce run from early part of this year till we got up to around this $3,400 level, which proved to be a strong level of resistance. Then we start to pull back, see the 20-period moving average starting to curl lower. So could we see another push back up towards this level? Yeah, but I think it's going to be met with some resistance right around here. So that's a weekly chart of the Dow. Let's look at the here and now. It's daily chart of the Dow. Again, we got a bounce. Look at the RSI. See that bounce off of oversold. So we could see a continuation in the near term, possibility, but we're running into resistance right here, the 20-period moving average. So the market is going to see if they can push back above this 20-period moving average on this daily and try to retest this resistance level up here, which is look like it's right around, let's see. Right around 33,000, about 33,600. So that if we do rally back up to that, that's a strong rally. That's about another 600 points from where the market is down. And that can happen real quick, folks, if we do make it back up to that level. But if we do have a strong rally like that, I suspect we're going to be met with some fierce selling up at this level of resistance. So keep that in mind, around between 3,500 to 3,600. That's a possibility on the Dow at the beginning of this week, because we see a little pivot higher. Let's look at the Dow. Let's take a look at the NASDAQ, which has been the strongest of the bunch, considering AI craze in what markets are showing us. Now, this one is, I think, is the one that's probably going to be met with the most probably a fierce sell-off. I mean, that's a possibility, because this is a daily chart. The RSI is already above 75. Above 75. It's in overbought territory in a major way and looking to push higher with this green candle. So the RSI on the daily chart is above 75. That is a huge signal that we could be seeing a blow off top here. Last time we've seen some action like that, and we got this huge rally, a huge move away from the moving average. Remember, price likes to come back to the mean. We got a huge rally away from this moving average here, that little space there. The last time we got a gap up like that was back in the beginning of this year. And we see what happened with that. We started to pull back and trap some bulls, and we see what happened here. All the way back down to close to 1100. So we're up in this overbought territory again. So what happens next? I don't think we're going to go too much for overbought, but we see overbought on the daily chart. Let's look at the weekly chart. NASDAQ. And here is a level of resistance right here too. So I didn't see that one, but here's a level of resistance right here. We are very close to that level. Yep. So a little bit higher here. Could see the price action go to right around at 13,000, almost 13,200. So just a little bit higher we could see, and we could see, and then we could be met with that fierce resistance. And that the weekly chart shows RSI almost at 80, 78%, 78 RSI showing a 78 down at the bottom. Get this tool out the way. Look down at the bottom, we see that RSI is hovering right around 78. Look at that, RSI around 78. That is extremely overbought on the weekly chart. And the monthly chart, just not quite overbought yet, but I don't think we're going to get to that level. I think we're going to peter out here eventually because we're running into a strong level of resistance right around that 13,200. Here's a 4-hour chart, also overbought territory, around 78. So for those who are ready to jump in and continue to chase the AI craze, be careful. Don't jump in too late because RSI is screaming, I'm ready for reversal on the NASDAQ. And also while we're looking at the NASDAQ, let's take a look at NVIDIA. For those who are able to jump in NVIDIA prior to the big pop. It's out there in no man's land, folks. Look at it. Look at this big gap up on this 4-hour chart. You see the big gap up there? Well away from the 20-period moving average. Folks, that is a big time, sell the news. If you got that pop, great. Take your money and run. I don't think we're going to go much higher than where we are here. Looking at the big gap up on the 4-hour chart, and that has the RSI right at 85 on a 4-hour chart in NVIDIA. Look at that, 80 RSI around 85. In a bear market too, keep that in mind. If it wasn't a bull market, then I would say, hey, maybe we pull back a little bit and keep going. But we're in a bear market, RSI well above overbought territory, out to new highs on NVIDIA. Don't be caught holding the bag. Take your profits and hit for the exits. Look at a daily chart on NVIDIA. See the gap up. RSI at 90 on a daily chart. Look at that. RSI at 89.46. That is insane. Insanely overbought. Everybody's just chasing this craze. Had a great earnings report. So normally, it's time to sell the news, Time to sell the news. Sell the pop, sell the rip. So got a weekly chart NVIDIA. Look at that big old gap up, folks. And look at that. It's been overbought for quite a bit, but this is extremely overbought. Look at this RSI. It is extreme. This is the most extreme we've had probably in history. I mean, it's been a great stock to hide in, but it's severely overbought, folks. This weekly chart showing RSI of 93, almost 94. It's extremely overbought. So the greed gauge is really screaming. Greed gauge is really screaming. So if you got that rally, great. Take your profits and run. Don't get caught holding the bag. Even the monthly chart reached this level right here, which is, I think we're going to come right back down towards it. That's around 350, around 350. So I suspect we would find a way to come back down towards it, and maybe even break back below it. So I do think NVIDIA is going to be the wave of the future, but until we get out of this bear market, folks, don't suspect they're going to see much more rally out of this thing. But we could see some pullback and some sideways consolidation. We'll have to wait and see what happens, but I don't think we're going to go much higher than where we are. All right. So that is what the NASDAQ and NASDAQ is probably going to be in store for in this bear market, is that we're going to see some of these, the balloon probably burst out of some of this craze that we're seeing some of these stocks jump out to. All right, now let's take a look at them. So look at the NASDAQ, Russell I mean, then look at the Russell. So look at the Russell. Look at everything else. Look at the Russell real quick. All right. So here's Russell. It's and the one that's been struggling the most. So it is in the 4-hour chart. It's struggling just to get back above its 20 per moving average. Like it's trying to peter out right there. We could get a little rally. If we could get a little rally, everything else we probably see a little rally in the Russell, but it's the weakest rally of all. Here's the daily chart. Like it wants to go up just a little bit more, and then we're probably going to see some rejection because like we got a huge rejection here. Is it with this gap up, then pull right back down. So we could see another rally back up to try to test this level right around 1785, possibly, and then possibly get another rejection. Here's a weekly chart. It shows it's just been going nowhere. Russell's been stuck at this 20 per moving average. It's been going nowhere. So let's look at the Russell. One more thing I wanted to take a look at, which is on my mind and it just slipped. Let's see. Oh, the dollar. Take a look at King Dollar, XY. So there's a strong dollar, folks. That's still brewing. That's not good for stocks. All right. So the dollar was around 101. Look where we're at now. Around 104. Around 104, pushing up towards that 105 level. You're pushing up towards this level of resistance on the dollar. So right around 105 is where we could see the dollar go next, since we reached that point before in reverse. And now the question is what happens when we get to that level? We have to wait and see. If we break out above that level, just like NVIDIA's breaking out, you're going to see pressure on the markets. The market doesn't like a raging bull dollar. Here's a monthly chart of the dollar, and it looks like it's in reversal mode, folks. It's like it is in reversal mode after such a strong rally back in 2021, up right towards the around October of between September and October of 2022. So we saw the dollar start to peter out. And what happened around the same time? We saw the market started to rally. So it looks like we found support around here. So, and it looks like the RSI is starting to curl back up. So with that said, the same way we saw the markets pop while the dollar was pulling back. So what happens if the dollar starts to rise in a major way? Then we can see the same opposite of the market. So okay, folks, I think that's all I wanted to cover. Just the major stuff to show you guys what the markets are showing us is that we could see a blow off top in some of these stocks that are still running right now, and a quick reversal. So keep that in mind. We're still in the bear market. That's the thing. We're still in a bear market until that VIX really gets elevated. The daily VIX that we watch, long-term VIX, that gets elevated. I don't expect that we're going to see a new bull market. Now, when we see it start saying a raging bull VIX, VIX above 20, then the VIX head to 25, VIX head towards 30, then we'll start to look at where the markets are showing us, because we start getting a big move in the VIX, then we can start to look towards the future for possible reversal and a new bull market. But until then, folks, still in bear market. The VIX is real low, and just be mindful and be careful. All right, that's all I have for now. Catch you guys in the next video.